RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. This is our report for Monday. I started a bit late here today. Obviously, everybody's sitting around watching the fireworks. Actually, not really even in the day trading sort of frame of mind today. Kind of slacking off, to be honest with you. We were watching the fireworks in Japan last night. I think I was actually up pretty late posting in the TRI lounge as we were watching Japan meltdown. As a result, I kind of, I knew it was going to be a very ugly open here this morning, but at the same time too, this feels kind of trappy, to be honest with you. Something doesn't smell right about this. And, if anything, if you want some sort of valuable information that I can give you in reference to this type of market state, you're only going to find a bottom if markets are down and stay down through an event like this. The fact that actually I see I even see things like Ethereum starting to rally here. To me, that smacks of this is just middle of the move kind of idea. There's some interesting levels that are getting hit on things like the stock market, and I think that we did hit a bunch of pretty important levels. We often talk about big fat round numbers as psychological magnets. And of course, Bitcoin hit a huge psychological magnet last night. How are those people saying buy Bitcoin at 70,000 and you'll do great? How are they feeling today, eh? Fucking idiots. So, there were people that were posted that this video today is going to be like Beamish doing a slam dunk kind of thing. I don't really go down the whole I told you so kind of road, but I told you so. Anyway, we'll say, as you see our little information piece on the lower right-hand corner, we'll take a look at the breadth. One thing I do like about what I'm seeing in the market, and it would make sense that, the media is going to be reporting, oh, horrifically ugly, oh, the stock market's crashing, it's the other one. But actually, we're starting to get signs that we're oversold. Very typically in oversold markets, I even build specific indicators that tell me when things are oversold and the public's coming in and panic selling. The public usually sells the bottom, buys the top. You know how this game goes. So if anything, like I said earlier, if this was actually the bottom and we were done all this, the markets would be down, they would stay down, they would be completely depressed. There'd be this is the end, there's no reprieve, blah 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 blah. And then the Fed will come in and go, okay, well, fine, here, you know what, we'll cut rates and hopefully that makes you happy, and boom, start the whole game again, over again. But I'm not seeing that. What I'm seeing is the selling sort of started in earnest actually last week, following Jerry's party there. And the weird thing is that people were I don't know if they were kind of hoping maybe the Fed might even cut rates in August there. And the data is okay here. I mean, the headlines are, oh, everybody's fearful that the U.S. economy is going to go into recession. I mean, is any other economy in the world doing anything right now? I mean, are we all 100% dependent on the U.S. economy? I mean, I found like India here is talking about, the U.S. economy could potentially go into recession, so Indian stocks are selling off. It's like, what the hell? This doesn't make any sense at all. So I don't know. Something doesn't smell right about all of this. Tech stocks look pretty darn vulnerable. And as Adam had pointed out, one semiconductor stock that I'm very interested in is down in a buying window for me now. So we'll probably look at that in the after party, Adam. We don't really need to go into specifics here in this free broadcast. So as you see on the screen here, we're going to look at the breadth and sort of a comment on overbought and oversold. We did have Econs come out this morning. I think on balance, we are seeing a softening of the US economy. Readings below 50 on things like PMIs are supposed to be contractatory. Contractatory, is that a word? And more importantly, I think a lot of people were watching the service sector down in the States with the baby boomers being fully in retirement. I think that the U.S. economy, and I think it's generally just accepted and known, U.S. economy is now more of a service-based economy versus manufacturing. Of course, Mr. Trump was watching lots of interviews with him, and he wants to change all that if reelected. So you might find that you might see a bit of position squaring with regard to sectors that do really well in the service sector. Things like technology, that's probably along Adam's lines. I did notice the headline, like most of the tech stocks were getting ripped here today. We'll talk a little bit about price action. As I said, I actually think that something like Ethereum and stuff like that, I think they've actually hit some sort of short-term bottom here. And unfortunately, with the way that the options game is played, and actually it'd be interesting to see where our next big monthly options expiry is coming up here. That's going to be the end of next week, will be the August contract. I wouldn't be surprised if they do some funny business all through here to try and get people to, load up on the options that will expire on the 16th. And of course, I think that, last week was a weekly options expiry, but we pointed out there's just a ton of shenanigans going on with regard to the options markets. And, I guess the topic specifically here today, I get the impression that this really got triggered when the Japanese central bank actually raised interest rates. And now, of course, if the rest of the world is talking recession and sort of the need to lower interest rates, then does that whole carry trade that's been going on in Japan now for, Jesus, better part of 10, 15 years, if not 20 years, does that actually start unwinding? And that's where I think most of this pressure is actually coming from. Japanese yen. It's interesting. Somebody was asking recently about the Japanese yen, and I noticed that the yen is moving up smartly here. It's moving up off of a V bottom, so I don't know whether this is the start of a new trend or it's just a mad, short covering rally. But I get the impression that it's sort of like this is more about, the free money days in Japan are over. So as a result, there's a massive repatriation and sort of a shuffling of capital going on all around the world because of that repatriation. That, in my opinion, that's what's really driving this. The news headlines, the media, they're going to paint that the economy and the fear of recession in the States, which, to a certain degree, you could argue that recession in itself will require lower short-term interest rates. But it's the actual interest rate differentials that are actually driving this. I'd also say too, I think that's about the easiest way to describe this. So, and then obviously in this kind of environment, the breadth of the market's going to be pretty weak. So, when we look at things like market carpets, interesting, you can see there even AMD is actually up on the day here. in the tech sector, but you can see, I mean, the selling is right across the board. Interesting how AMD though there is trying to buck the overall trend. And actually, this was quite a bit more red earlier this morning. And as I said earlier, if this is really a bear market, a down market, and just completely washed out, and the move we're near the bottom, then you'll what you would prefer to see is that this all be red, stay red, and just be down into the close. And actually, a really good example of that is like on the hourly chart, sort of the intraday kind of conversation. Bitcoin put in a really hard low there into the New York Open this morning, which and then violently reversed off of that low on a nice railroad tracks pattern, which tells me that this isn't the bottom, but this is definitely like a short-term bottom here over, say, the coming week or two. Yeah, I wouldn't even be surprised if they get a whole bunch of people buying put options here down at the bottom. Then they start rallying the market back up into that options expiry, like I talked about. That happens in a couple of weeks. So if you did actually want to see a bottom, and this is a washed out stock market, you would prefer to see this solidly red. The fact that actually this is now part of the market here is actually starting to look relatively respectable. I mean, not like booming green, but you know, hell, like you got Lamb Research actually up on the day, KLA up, AMD up. You know, what do we got down here? ON Semiconductor up 4%. So I don't know. I think this is just it's just the middle of the summer, middle of sort of silly season. And you know, if we put it into perspective, so you can see this is sort of the day trading matrix I like to follow, you can see these markets are rallying smartly off of the lows here. And so much so that crude actually might even go positive on the day. You can see the huge double bottom that was put in here this morning on crude. So stocks sink, yes, but at the same time too, this is not the hallmark of a long-term market bottom. This is just sort of like, business as usual. Stocks go up, stocks go down. Um, and I think actually, if we look at the daily chart, right, this probably is a perfect analogy for you. So, you know, Brian and his love affair for fog and bombs. You might even argue that all they did was they just back price into a reload zone. You know, if anything, this is probably a really good analogy of confluence. So actually, you know what? Before we get into that in earnest, I suppose you could probably put the summary piece away there, Chris. Oh, it looks like you did. All right, cool. And then just to illustrate this zone, I'm not surprised that people actually stepped in on the buy side on this market down here. So we opened up all the way down here. This is the S&P 500 depository receipt. What the hell? We know the gaps like to be filled in. You can see how the market worked its way back up to fill in this gap and then just puked right out. And keep in mind, there is a gap all the way up top. So we might very easily rally right back up top here. But look at this. This is ridiculous. So they actually had the SPY open up down here. And really, the entire day, it's just been climbing the wall of worry. Rah. But as I said, that's not the hallmark of what a market bottom looks like. This is, and of course, market bottom is never made in like one day, unless it's like some sort of key reversal or something. So this is they throwing the baby out with the bathwater, but ironically enough, they're throwing the baby out with the bathwater right into a buying window. There's good old Foggenbaum and his big bifurcation level, 4.669. There's reload zones. Interesting how they were able to take it in and fill in this gap. I mean, the fact that we got this huge gap just below and then this gap right here means there's no way that this could be the bottom. We're definitely going to, number one, have to test that low at some point in the not too distant future, but we really should fill in these gaps. And unfortunately, it's going to be like, how are you supposed to like trade this here? If you woke up first thing this morning thinking, oh, you know what, I'm thinking about selling stocks. I mean, you literally had no choice but to basically sell right on the lows. Terrible trade location. In fact, that's a buying window, not a selling window, which drives you crazy. You could argue though that and it's fascinating, this ICT setup that we jokingly refer to on a consistent basis. 61.8 tag, which is sort of like a BB bastardization of Mr. ICT setup. I love that as a trade location. And look what a boss trade that was. If you had stepped in right in the face of that rally and shorted that, oh boy, whatever, you look like a genius. So, and if you look at the profile, we know that this profile wants to look like a parabola, something like that. So that means all of this needs filling in. I mean, there is a ton of backfilling to do. And of course, what's the statistical odds of these gaps now need filling in? So my hunch here is this is just summer markets kind of screwing around, low liquidity. And yeah, thanks, Chris. I mean, I suppose, but if we, looking at the breadth has not been happy for a while here. So not really a big surprise that there's sort of trouble here. The good part, I suppose, is we're finally starting to get to the point where things like the ES is starting to approach oversold condition. If we look at the breadth of the broader market, we've been talking about this for quite some time, um, about how the broader breadth, when we scrolled down on this image, it was really hard for us to find any W's anywhere. I mean, the Dow Industrials just looks like poop here since the end of June. Transports was trying to firm up here, but the rally attempt failed. Probably a really good signal that we were going to roll over. Utilities, they don't look very happy now. If anything, they look like they're a bit vulnerable here. Interesting that the bonds are trying to turn back up. Interesting too how the commodities actually were trying to turn back up, but they're getting whacked here. And of course, the S&P 500, the European stocks, Canadian stocks. I mean, they're very little to be bullish about. And of course, good old crypto. Crypto's been ill for this breadth indicator's been ill for quite some time. But what do you think? Are we oversold yet? And this is actually what leads me to believe that we're actually closer to a bottom here than a top, which is ironic because, of course, everybody's throwing the baby out with the bathwater right now. Eh? So I think and look at this freaking rally. I mean, there's no way that you're going to get the Fed to come in and save the day with this kind of rally off the lows. That's it. That's not the hallmark of a market bottom when you have a kind of monstrous spike like that. When we look at Bitcoin in particular, probably finish up. Well, I mean, we could take a quick boo at the Econs, just to sort of, this is why I don't think that this is a market bottom, and really, I don't even see justification for the Fed to come in and panic and lower interest rates. So remember we had said earlier, things like the global PMI service, these are all above 50. So I'm sorry, but a reading above 50 actually implies expansion. So there's something wrong with that. This is what a lot of sort of the news headlines and stuff we're catching on about, like what's going to happen here. And I think this is half the reason why the S&P is actually rallying right now is you can see we did have a reading in the services sector below 50 their last reading. And, I'm sure a lot of people were worried that we're going to see continuation there, but this actually came in actually even beating the forecast and consensus expectations at 51.4. Again, a reading above 50 is actually expansion, not contraction. I think that the trend is actually heading towards the economy softening, the economy weakening, all that kind of talk. As I've said here repeatedly, though, I don't think that the United States of America is the place that you should look for disaster. Ironically enough, the place that you should look for disaster is all the places that are heavily dependent on the US just providing free money and the US economy being really weak and these international markets, being conceived as sort of relatively more attractive than the US. I don't think that's the case anymore, especially you hear me going on about China and all that. I guess just the bottom line here is the numbers actually came in a little bit better than expected this morning. So that's actually why I think you're actually seeing the rally there. The headline here right out of the gate, and what was fascinating about this was the selling really started to get going in Japan. And I've been talking to you guys about this. Yes, I mean, the US market's soft, but I think it's going to come roaring back here. But if we actually look at where's the best place to show you this? If we actually, I mean, look at that spike low there. Whoop, there you go. Look at that spike low there. This is the S&P 500 E-mini futures. I do think that we hit a technical objective here. Good old Foggenbaums. We've gone way beyond ABCDs. Ironically enough, harmonically, this is the level that the market really wants to go to. Right there. So we actually way overshot that. And as I said there earlier, and we've talked about this lots, wicks and tails like to be eaten. At some point, we will have to go and revisit that. I guess a big part of this, of course, was this US dollar. US dollar index been coming off smartly here recently. And of course, we do have the big fat M tops here. So I think probably a lot of people in the world are seeing this top in the US dollar, sort of anticipating that the Fed's going to be cutting rates, which means that the sort of propensity to hold U.S. paper is less. I get the feeling though that maybe we kind of hit a bit of a crescendo there this morning. Doesn't it look like that was maybe a capitulation bottom and that huge tail there in the U.S. dollar? If we look at these currencies, as I said there a moment ago, I think what actually started this cascade off was this Japanese yen going absolutely crazy here. So the problem here, though, is I don't think that the Japanese yen, I don't think this is really a long-term cyclical turn. We've got the shorts on the run, and let's really punish them. And like I said, with the Japanese raising short-term interest rates and the perception that the Americans are going to have to lower their interest rates, I think a lot of people that put on this, hey, we'll go borrow money in Japan, go take it over to the States, buy US stocks. And that's just an easy slam dunk win. There's no cost to borrow money in Japan, so why not? So I think that's what's going on here. Is this is just nothing more than just a dead cat bounce, and I think that this thing could easily rally into reload zones, which is still quite a bit higher than where we are right now. So if somebody was going to ask me what is causing all of this, I think this is sort of a you know what? There was a really easy, no-brainer trade to go and borrow money in Japan, and then go and even do things like buy Bitcoins. I think a lot of that is unwinding because there's no longer no cost to borrow money in Japan. So, which is interesting, right? Because I don't know what's going on with China. I don't think China, the economy there is that great. So, and I suppose if we're going to have like a good conversation about this, what we really should be looking at is things, well, okay, so what does the Nikkei actually look like? Because I think that, as I said before, I do think that this is actually more an international story than it is a US story. Of course, now I can never, oh, now what have I done? There you go. Hey, look at that. So, I mean, you want to see a market melting down, kaboom. And what was really interesting was I put out a tweet last week saying, what are you supposed to think if you ever see the market smiling at you? And we had this big old nasty market smiling at us, kaboom. So that's actually, I think, where the story is du jour. I think it's all about these international markets sort of unwinding. And if we just do a really simple fog and bomb, I think this thing's still got a long way to go here before light of the day. So, that's, if anything, that's probably a better sort of indication of what's driving international markets here than the ES. Um, so that's sort of my impression. Like I said, with regard to something like Bitcoin, I think it's in this crazy ass trading range where, as I had said there earlier, 50,000 bucks, huge psychological level. That's looking at this weekly chart that I've been showing you guys forever. So I was always wondering why we never hit 75,000 as a psychological level, but we did today here, hit the big fat round number 50 G's. And I get the impression, I've been talking to you guys at length about this trend line that goes back forever, right? Off of these old historic highs. In fact, you have to see the log scale to see that appropriately, but you can see off of that peak, and then off of that peak, and then this most recent cycle, you can see how the market completely oscillated around that trend line, then lost it, went into a bear, and then we came right back to it. It's interesting how we tagged that trend line on that Bitcoin ETF event. Then we went blasting through it to the upside, and here we are. We just tagged it again from the downside, or from the upside, heading down. So what's fascinating, because I even think that I see Colin. Yeah, there he is over there on YouTube. Uh, I think you could make the argument that this basically price just backed up into Colin's pump chaser zone. And we've been waiting for this forever. I mean, it's ironic that, I guess, what are we? We're now 21 weeks into the correction. And like I put this graphic together way back here, and I had sort of said, okay, well, what are like two simple scenarios going forward? And very simply put, if we have price back into Collins, but you can even see this. I got this on the chart. I want to make this guy famous. Right, there he is, Colin and the Pump Chasers. There you are, right? He's giving me a big high five. I don't think Colin even believed that this was going to happen himself. This time it's different. Anyway, so ironically enough, all we've done is we've just, I teach in my education program. This is the first stop target, 38.2 fib, right? This is exactly what's supposed to happen every damn market. It's like the market doesn't sort of clean itself up technically until we trade to this 38.2. So ironically enough, it's just business as usual. There's nothing really out of the ordinary going on here. It's just, of course, we and if anything, if I've got 60 people watching this video. I mean, if you believe in, no, that's not the way to say this. If you want to become a professional money manager, you have to recognize the tells of an overextended market. You have to recognize when it's extremely dangerous for you to go in and put new money to work in the market. There were so many tells through here. It was embarrassing. I talk about this at length. I'm not going to go on to it, Gucci sweater wearers, all that kind of time. I might argue that a lot of that is now gone. And one thing I noticed today, on this sort of meltdown in the US market coming into the session, actually Ethereum's behaving relatively well in here. I think that the correction in this thing's pretty much done. I had put out a tweet, and this is in the short term. I had put out a tweet yesterday saying, I'm wondering whether maybe, I mean, these shorts off the top worked like absolute genius. But you can see, if we just do a really simple fib, I'll just change this to daily so you can see, from the lows back up to the highs. What is our time-tested rule for where to take profits? This is just TA 101. This is one of the first lessons I learned a million years ago. Was just, follow the 50% rule. So we've now technically hit that at 2,500 bucks, somewhere in that area. We've also hit like Alt A, B, C, D. You can see that we banged against this trend line of our sort of our playground that I like to talk about. I would not be surprised. And of course, we got a lot of panic and a lot of fear in the marketplace. And what's Ethereum actually doing here this morning? Hey, what the hell's going on here? Why are we rallying? If you're looking for trade location, well, I definitely think that, candle body lows for trade location. I would keep a close eye on that level going forward now if you want to try and hunt like a nice sneaky way to get long this market. We'll see how this develops. I think yesterday in the videos I said, we're in the point where, it's probably well, not probably, it is. It's way, way too late to be a seller. And I did hear some people in the lounge posting, social media posts and stuff about how people were actually bailing on crypto down in here. I don't think that that's a smart idea. You missed this sell. It was way up top here, as this demonstration clearly demonstrated. I mean, this was, and even the tweet that I put out here is, I hate to say it, folks, but this is incredibly cliche, this short setup, and it played out exactly as you would expect. Notice also too off the top, we banged into an 877. Usually when you hit these 877s, that's sort of a capitulation event. And again, boom, there we are. So I get the sneaky suspicion that we're probably closer to the bottom than the top. But at the same time, too, what we want to, it's the three-step process. You all know how this goes. I think we're starting to come into trade locations. Notice 61.8. Wow, look at that tag there this morning. Oh my God, that's crazy. Back down into previous structural support levels, look left, all that kind of conversation. Alt A, B, C, D levels. So at this point, I think you can make the argument we have trade locations. So now we want to go into the phase of things like indicator confirmation. Do we have bullish divergence here yet? No. So could we see a nice little swim against these lows? Maybe we come back down, put in some bottom structure, set up the divergences down here, and then we get the trade set up. Could be. You can see Willie's stupid. There's a great analogy that if you were thinking about selling, now is not the time to be a seller. And I suppose if you wanted to join the short train, like what I'm worried about here is I do think that because of this huge M, but keep in mind how long that took to develop, right? That's from March, and it just confirmed now in August. March, April, May, June, July, August. That's 6 months. So, 6 month window. If you think about this, it's sort of like panic low, panic low. I like the idea, and I even post this on I put this out in social media, and people they spat their coffee out through their nose, kind of thing. Like, holy shit, this guy's calling for like 1,000 ETH. And yeah, I do think so. I think we'll leave the broadcast off on this and head over to the after party, and we can look at individual stocks. Adam, I know you want me to look at Intel and stuff. But I would not be surprised. From what I understand, Mr. Trump was supposed to be shot. There you go. He was supposed to survive. He's supposed to go on to win the election. And then, I wouldn't be surprised if we actually counter trend rally. And then, something like maybe the first 4 or 5 months of his new term, there's supposed to be some absolute wipeout event here in the economy. And I do like, because this M is pretty well solidified in there. And one thing that I think I've been seeing over and over and over is if we look at Bitcoin, and I don't think this is necessarily with regard to Bitcoin. I think Mr. Fink is in charge of Bitcoin. We've come down into sort of what I would consider sort of probably the areas where we're going to see some sort of footing here for the corn. And, of course, M's and W's dictate. So we're still Ming out. As soon as we start Wing out, then we can change our tune there. But that's not really what I wanted to try and highlight here. I mean, I personally, I don't know whether Bitcoin's probably the place where you're going to make fortunes. I do like the idea that Ethereum is basically where Bitcoin was last cycle. So we had the big rally off of the lows. So here's your Ethereum chart. Let's see if I can do this without totally messing up your brains here. So there is the reload short zone against the old highs, and we rallied up into there and failed. So that's basically the same thing. There's Bitcoin rallying up into 61.8s and then failing. Then he had to come back down, play against 61.8. And I think that's basically what Ethereum here is doing right now. There is this 61.8 level. And also, too, notice that is a Wyckoff check. And I think I even posted in the TRI lounge off of my laptop. I'm working off of a big computer, so a different set of charts. But off of the laptop, I actually posted there's about like 5 or 6 different reasons why I would think that this actually turns into a bit of a pivot here. And interestingly enough, like this, I think is one of these ICT guy setups, right? Because that's a bearish market structure. They broke that. So 61.8 tags actually is a trade location for me off of that ICT guy kind of setup thinking. So, there is that. And of course, if we go back to this chart, you can see 61.8. We actually rallied smartly off of those lows. And as I said, I'm thinking that yes, we have to trade down to things like 88.6s because you notice after this dead cat bounce rally, then there was crisis. Ooh. Are we? And I even put a tweet out last night saying, should we expect a COVID 2.0? Maybe. And of course, if you even suggest that any of this is a conspiracy, oh, you better throw that guy in jail, and shut him the hell up. I mean, it's stunning how corrupt this society is. So I like the idea that there's going to be some sort of horrific crisis, maybe the first, second quarter of Mr. Trump's new term, and the whole market's going to get absolutely ripped apart. And I like the idea, and notice 2.618, 88.6. I like the idea that Ethereum has to do the same thing. 2.618, 88.6, nice little stab right down against these lows, break all of the crypto kids' hearts. And sadly, what I'm worried about, of course, is in that event, you're going to have people starting to come out and say, I will sacrifice my life to save capitalism. When what they're really doing is they're just playing into the bankster crook's hands. And of course, everybody says, all right, yeah, go and print as much money as you want. Oh, do anything you can to save capitalism. And the banks go, cha-ching, we win again, and start the whole damn fucking thing all over again. So, ironically enough, I actually think we had a bit of a capitulation low here this morning. So, we'll see how this goes. I mean, certainly no reason to justify touching this, but at the same time, too, when I look at right across the board on these cryptos, all I see is just everything. Oh, now I see a blank screen. I see everything just puking out. But is there, and actually, this is an interesting note to leave off on. Let's see if, there's 61 people watching on YouTube here. So let's see. Can you tell me what is the name of this type of candle? Huge tail, little body up top. Oh, look at that. There's a similar one there. And there's actually much better examples. This one I told all you guys, for God's sakes, please don't chase. Huge tail, little body right up top. And look what happened the last time. Boom, big rally. If anything, this is a good example. We don't necessarily have to take the trade here, but we can always just wait for a test of these lows, find some sort of W. And if it turns back up, you got yourself a buy signal. And they're everywhere. Look at this screen. You can see them all over the place. Look at this EGLD. This is a favorite one in the crypto space. Look at that. What the hell do we call that kind of candle? Huge tail, little body way up top there. Hey, nice, Dave. Hammer, Dragonfly Doji. Yeah, you're thinking along sort of my thinking here. When we get these huge wicks and then the bodies near the bottom, that's a bad sign. And now, Mr. BB, let's keep this nice and clean. There are children watching these videos. Only Brian's allowed to. I'm just kidding. All right. Anyway, point of the matter here is I'm seeing a lot of this. And this is kind of the hallmark of a panic capitulation low. Remember the other day, I was warning you guys, for God's sakes, do not chase these markets up top here. You're going to get your head handed to you. And that is the illustration of you getting your head handed to you. But notice, look at the dump this morning right into original market structure, 78.6. Who can tell me what's the name of that setup that we actually teach at TRI? This is actually a setup that we actually teach at TRI. It's right there. And if you had your order working right off that 78.6, man, the chicks would be throwing their panties at you right now. I suppose if you're a lady, the guys would be throwing their jock straps at you. Is that how that works? I don't know. Anyway, so and again, look at the size of this hammer low here, right? I mean, when you start seeing this kind of price action, that's a sign we're closer to a bottom than a top. And look at that beautiful shooting star. That's a sign that we're at the top. So take screenshots of this, folks. This is actually really good learning material for all of you, including myself. So the fact that we're seeing so many tails leads me to believe that we're near some sort of short-term bottom. So all of you should probably go, oh, thank God. That was horrible. But we're probably a little bit early for us to actually like pound the table and, oh my God, look at all these W's. They're all breaking out. I think this is sort of like panic low, capitulation low, sell, throw the baby out with the bathwater. It's the end of the world. And I think that that's actually a little premature in thinking. Okay, so I talked way too much today. Look at that. Holy crap, almost an hour long. But obviously, there was a hell of a lot going on here in the market. I did start about 10 minutes late, so it was only about 40 minutes. But what the hell? I'm going on vacation at the end of this week, so we'll give you a little bit of extra on these videos. And if you like the material, consider joining the site. And we're actually thinking about reworking this whole video platform kind of thing. So if anything, consider this a nice treat for you. You may not have this in the not too distant future, but if you do like this, maybe consider joining the site where we do, I think we'll be continuing to do the videos on the site, just in a slightly different format. All right, have yourselves a great day. Slow and steady wins the race. PMA for the win. Ironically enough, we are now actually into what I would consider the market has actually technically corrected. So now, if we actually start seeing these indicators go and start W out, I don't think they're anywhere close to that. But you can see OBV is trying to div out here. MACD could try and div out here, but if we start seeing these indicators all start Wing out, then at least, we're probably closer to the bottom than the top. And of course, there is our big eclipse window that I think is the hallmark of the shift out of this sort of malaise kind of market state. And of course, we know that big fat political events are coming up here. So don't be surprised if we just sort of saucer bottom our way through this. The only question is, do we have one more big horrific dump here into that insane panic event there? Probably like March, April of next year. But I wouldn't be surprised if we actually hit some sort of capitulation low here on these guys today. All right, have yourselves a great day. We'll see everybody again tomorrow, I suppose, for more daily briefs. And let's go over and hang out in the after party and shoot the shit for the next hour or two and answer your questions. And for Adam, we'll take a good look at Intel and what's going on over there. All right. Have yourselves a great day. All the best. And bye for now.